This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. As always, with me, my colleagues Sonia and Nigel. Guys, hi. Good morning.
Morning.
Morning. Looking a little different today, are we?
We are celebrating Republic Day.
Absolutely, which means tomorrow
is a holiday.
It's a holiday. So,
anyone going for flag hoisting?
Yes.
I mean, we have one in our complex, so
Yes.
that happens every year, and always good.
Yeah, with the kids.
Great for the kids, yeah.
Great for the kids as well. You know, they love the atmosphere. But Prashant, what are you doing about Sonia this morning? It's going to be difficult to concentrate, yeah?
I think so.
I don't know what you guys are talking about, okay? It's a holiday tomorrow. The mood is good. The Bulls are in a good mood as well, right?
Yeah, we are in a good mood as well.
Absolutely.
Let's get straight to it.
Well, let's tell you what happened last night, as we always do. I mean, begin the sort of setup. So last night, I mean, consolidation, right? I mean, the US market has been doing pretty well for the last, 4 or 5 days. And last night, not very much. Equities, at least. You look at the S&P, you look at the Dow, the NASDAQ. A day of consolidation after very strong gains. You know, as of day before yesterday, the NASDAQ was up almost 7.5% in 3 days flat. It's up some 8.5% for the year. So it's run very hard, very strong. And smaller NASDAQ stocks are up 30, 40, 50%. I mean, I'm not talking about the Microsofts and Amazons of the world, but smaller ones. So some consolidation is due. The one thing which I want to point out, and this was kind of emerging, and I mentioned this yesterday as a bit of a risk, was oil prices steadily marching all the way to $90. But the rally is stalled. At least yesterday's price action is important, and we'll maybe put out a chart later. There was an important resistance at 89.90 to a barrel. We got to it, and then we pulled back. The Brent oil price yesterday closed down 2% to about 86.41. Technically speaking, I mean, it should head down to about 82 now. So if this pattern plays out, we'll talk about this. Anyway, this is important from an India macro perspective. Now, where do we go from here? I mean, global Q, and I think that could determine the course for US markets, NASDAQ, and broader, I mean, the US markets per se after the rally we've had. If the commentary is positive, optimistic, I think, you know, the S&P maybe takes out for 4,100, sort of goes higher. If it is cautious, like, for example, what we heard from Satya Nadella recently, you know, it could, I think, result in a bit of a pullback. So I think over the next couple of days, as large tech companies report earnings, we'll hear from them in terms of outlook for the rest of the year. It'll be important to watch. I'll get to the Nifty and the Bank Nifty. So yesterday was a bit of a disappointing day because, I mean, the market opened with a flourish, and then it lost mostly all of the gains to end absolutely flat. Intraday, it did take out 18,183, which is the recent high. But then it actually got higher than that, but then it pulled back from there. So a close above 18,183 and then 18,191, which is the retracement level, is important. I mean, the cluster basically is important to gain further momentum on the upside. So that's point number one. Near-term support stands at 18,016, which is, I think, a bit of a near-term reversal kind of level. It'll be good if that level is held, if we get some correction, some selling. On the Bank Nifty, it found resistance at this falling trend line. Exactly. I mean, it hit the day's high, was at the trend line, the falling trend line, and then the Bank Nifty reversed. That level, yes, which is yesterday's high, stands at 43,079, 43079, and that needs to be crossed on a closing basis before we can kind of talk about higher levels. If you're able to do that, just putting this out, on the way up, 43,578, which is the previous swing high, is the next level to take out on the Bank Nifty. And the low on the Bank Nifty of 42,334 should not be broken on the downside for this higher high, higher low kind of pattern not to be violated. So some levels on the Nifty and the Bank Nifty. But yesterday, I think, was a bit of a consolidation kind of a day. We don't have very much by way of cues last night, overnight. You know, SGX on your screen indicating about a 50-odd point downside, maybe another quietish kind of day. Tomorrow, of course, we've got a market holiday coming up as well. Guys, hi.
So you said it's a consolidation kind of a day, right? It's been a consolidation kind of a month for this market. Every time it gets to 18,200, there's a bit of a hurdle, bounces back from 17,800. So let's see if there's any big trigger that can take the market out of this range. For now, it's a very narrow trading range that we're looking at. The Nifty is facing resistance at that 18,230 level, which is the January high that we spoke about earlier. But a lot of triggers to watch out for. The DII is bought in the cash markets yesterday to the tune of 1,144 crores. FI selling, although it has been reducing over the last many days. Yesterday was a relatively higher figure, about 760 crores. But I'm looking at a lot of local cues. So there was a good earnings that came in from the likes of, say, TVS Motor. Autos are back. So you saw good earnings from Maruti. TVS is moving very aggressively in the electric vehicle space. A lot of brokerages have raised their target prices and the management commentary is positive. So just keep an eye out on that space. On the flip side, consumption continues to come out with subpar earnings. So Pidilite had a volume growth of just 1%, very weak earnings coming through from there. So that pocket could continue to be on the back burner. It's F&O expiry today, so that's important as well. And the event to watch next week would be the Fed meeting on the 31st of Jan, where there's a 25 basis points rate hike expected. So in the run-up to both the budget and the Fed meeting, the market is sort of in wait and watch mode. There are some big earnings today. There's Bajaj Auto, Tata Motors, so we'll keep tracking that one. But up until these big events take place, the market is sort of, fixated with this very tight range, Nigel.
Well, that's right, Sonia. In fact, we have the resistance level on both the indices, whether it's the Nifty or the Nifty Bank. On the Nifty, that 18,200 is a bit of a hurdle, and the Nifty Bank, 43,000 odd mark. And I say this because the last 5 sessions, you look at the Nifty, we're going to around 18,150 to around 18,200 odd. And from there, you're seeing some bit of supply. Let's pull up the highs of the last few days. And I made this point even on Monday morning that, in fact, that's the bit of a congestion zone for the index. We go to those levels and then we see profit taking coming in there. And for the Nifty Bank as well, last couple of sessions where we were going to around 43,000. And, from there, we have seen some bit of selling out there. So short point is we have the resistance in place. If the bulls can surprise and, in fact, get past either of those levels, 43,000 or around 18,200, then we'll be good for more. Let's take a look at what the FI is in the F&O market. Well, yesterday as well, the positioning now has moved to the long side. So from net short, they moved to net long, 58% of their positioning on the long side. They bought more calls than puts, so that's pretty good news. But the problem is, in the final hour of trade, you saw some unwinding of puts that were written earlier. And, that's making me a little bit cautious. Where was that unwinding? 18,100 put. Right till the last hour, there was addition out there. But towards the final hour of trade, there was unwinding out there. Now, this morning, let's see whether or not we see writing yet again at that particular level. Remember, it has a fair bit of open interest. The call writing continues to between the 18,150, 18,100 call, well, close to around 53 lakh shares were added out there, which brings us to the levels. Since the 18,150 call is getting, written aggressively, the premium is around 35 rupees. So your resistance is at around 18,150. And the positioning is such that at least as of now, with the data points that we have, the 18,050 is the level that should be held out for this series itself. That's for today's session. SGX Nifty suggesting you get a bit of a pullback. Maybe that 18,050 odd could be a good entry opportunity. If you can get in out there, keep a stop loss of around 20-30 points odd. Maybe risk reward could favor you going by the positioning. Final hour of trade, well, things will get rather volatile, but I'm counting on the zone of around 18,050 holding out.
Okay, and a lot of non-index interesting stocks coming out with numbers today. There's Tata Elxsi, there's Amara Raja, there's CEAT, so there's plenty to talk about through the course of the day. Before we start, let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Mark Matthews of Bank Julius Baer & Company will be joining in to discuss the global trade setup. Later, our research team will bring you the CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Deven Choksi of KR Choksi. All right, first up on the equities front, we have a comment coming in from Sanjay Mukim of JP Morgan, who says their conversations with investors indicate that positioning in India seems to have become too consensus now. He says the risks are that a macro slowdown could drive a shift from banks to IT, and sustained higher commodity prices could renew margin concerns for domestic businesses. He says they react to the first concern but not at the second. At the moment, given perceived probabilities, they are reducing their overweight on staples and adding some metals and Reliance Industries. They are also reducing allocation to Bharti following their downgrade and adding more two-wheelers in their list.
Well, here are some money market views as well. On the rupee, we've got Kunal Sudani of Shinhan Bank, who says that the US S&P Global PMI remained in contractionary territory, but is appearing to bottom out. Eurozone business activity made a surprise return to modest growth in January, pushing Euro-USD pair higher, while business activity in the UK reignited recession fears and weakened the British pound. Dollar index may find support at the 101.3 levels. For the dollar INR pair, Kunal expects 81.3 to act as a support, while 81.9 as a resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says bond yields traded in a range of 7.28 to 7.36% for the week. For the US, weak retail sales and PPI data led to initial buying in domestic bonds, but the bonds gave up gains on weak auction demand and higher SDL auction supply. Neeraj expects range-bound trading to continue till the budget. Next week is light on data, and markets will take cues from weekly auction demand and the SDL auction supply. He expects a 10-year benchmark bond yield to trade in a range of 7.3 to 7.35%.
All right, Mark Matthews of Bank Julius Baer and Company is joining us now. Mark, great to have you with us here. Thank you very much for your time.